I think it's a lot of noisy action below the surface. I don't think it was necessarily a thumbs up, thumbs down on the trade agreement necessarily. Market, I think, got a little bit of a first of the month, first of the quarter, new inflows type bid to start. There were a lot of the familiar favorites like Apple and Amazon up 1% for no particular reason. And then I think that the fact that oil popped higher drove energy stocks up, but some of the other related names down. So I think it's a net positive that we got this progress on Canada, but it was never, to me, a major overhang on the market that we had this disagreement out there.
No, because when the talks fell apart, we had some dramatic days here on Closing Bell. Canada walked away, the U.S. walked away, and it didn't move the market slower.
I think the market has kind of put the whole issue kind of to the side a little bit and said, well, we're not really going to expect resolution on China anytime soon. So the rest of it is just kind of playing around the edges.
Charlie, the clear sort of big move today was WTI and energy stocks. Is that something you think can continue, or above $75 now on WTI? Is it something that it's going to have to pull back throughout the rest of the year?
Yeah, I'm glad you asked me about that, because I do think a big story for the longer term is going to be inflation, which is going to feed into higher, not just oil prices, but natural resource prices. Anything in the ground tends to do well when inflation is going up. We get a number coming out at the end of the week that's going to talk about wages being higher. I think there's a lot of inflationary pressures. That's very good for oil. A generally strong economy is good for oil. There's a lot of reasons why these natural resource commodities are going to be moving higher.
You know, you've poured some cold water on some of the trade moving markets stories that we've had out there, and we're all focused on them because there's a lot of uncertainty. If it's not trade, what is it on a day-to-day basis, besides the sector-specific moves like we saw in energy right now, that you think is more important for this market?
I don't think there's a lot of stuff day-to-day that is very much in question. I think the market all year, by the way, up 9% year-to-date, the S&P 500, so it's not as if the market's been held back in any serious way necessarily. I think it's all about exactly how much are we supposed to pay for this year's great earnings growth going into a year when we're going to have decelerating growth, and potentially the Fed is going to stay on the march and higher yields. So I think that's the day-to-day push-pull of what's going on. And I don't know that there's necessarily a headline all the time that's going to encapsulate a lot of that. So I do understand why we're focused on trade, because that's one of the potential kind of self-inflicted wounds or potential negatives. And if you get an agreement, then a positive. But I don't think day-to-day the market is on pins and needles about it.